Welcome to today's Business Report. I'm Denise Williams, bringing you the developments shaping markets, capital access, and business decision-making across Jamaica and the region. Let's get into the stories that matter. The Planning Institute of Jamaica, PBCJ, says the country is not in a recession. The statement comes after Jamaica recorded 2 consecutive quarters of negative growth, the first being the negative 7.5% recorded for the period October to December 2025, which was after Hurricane Melissa, and now the negative 5.9% recorded for the period ending March 2026. But according to Senior Director of Economic Planning Research and Policy Logistics at PBCJ, James Stewart, although the projections are negative, the economy is showing signs of recovery.
We are thinking that there is no possibility of a recession. Statin will publish the deseasonalized quarter-on-quarter performance in their report. But we are suspecting that as the conditions of Melissa, the negative conditions from Melissa, eases each successive quarter, there will be a growth relative to the preceding quarter. So you won't find 2 consecutive quarters of decline during the quarter-on-quarter comparison.
The Bank of Jamaica says demand for U.S. currency significantly exceeded supply in its latest foreign exchange intervention operation. According to the central bank, applications were opened on Thursday for the sale of US $30 million through its BFXITT standard intervention tool, with settlement scheduled for Friday. BOJ says it received 49 eligible bids valued at US $78.65 million, more than double the amount being offered. 21 bids were eventually allocated, with a full 30 million US taken up. The central bank says the settlement price for its allocated bills were $157.14 to $1 US. The Bank of Jamaica has kept its policy interest rate unchanged at 5.5% per annum. The central bank says the inflation outlook remains highly uncertain, pointing to continued sharp increases in international commodity prices, particularly crude oil. It cited disruptions linked to tensions involving the Strait of Hormuz, where shipping routes have been affected amid military activity involving U.S. and Iranian forces. The bank also warned that rising global inflation could spill over into Jamaica's domestic prices and economic activity. Against that backdrop, there are calls for the Bank of Jamaica to maintain its benchmark rate for at least the next 2 quarters, despite mounting inflationary pressures. For the trading period of May 21, 2026, the most actively traded securities were Kent Tire Holdings Jamaica Limited with 12,011,236 units, representing 38.05% of market sales activities. Trans Jamaica Highway Limited with 4,857,922 units, representing 15.39% of market sales activity. Omni Industries Limited with 3,199,029 units, representing 10.13% of market sales activities. Investor activity remained concentrated in transportation and distribution plays, signaling continued interest in dividend-producing and strategic assets. Turning to the foreign exchange market based on Bank of Jamaica data for May 21, 2026, Forex traders recorded significant activity with strong demand across major currencies. For the US dollar, trading margins reflected steady liquidity, with the US selling at $156.74 and buying at $157.57. For the Canadian dollar, moderate gains supported by 42-cent transaction spreads meant the Canadian dollar sold for $115.09 and was bought for $114.67. For the British pound, continued volatility offered short-term trading opportunities of $6.60 in profits for the banks. The British pound sold for $213.74 and was bought for $207.14. These movements underscore the importance of cash flow timing and currency awareness for businesses managing import costs, debt servicing, or overseas exposure. For our credit report tip of the day, most people underestimate the role credit plays in their future. They think credit is only about loans. In reality, your credit score and credit report influence almost every major life experience: where you live, how you recover from emergencies, the business opportunities you can pursue, the lifestyle you can sustain, the freedom you will have in retirement. Because credit is not just about borrowing money, it's about access. A strong credit profile lowers the cost of opportunity. A weak one increases friction everywhere. The difference shows up in real life. Higher interest rates, missed investment opportunities, delayed business growth, housing limitations, financial stress that affects health, relationships, and decision making. Meanwhile, people with strong credit move differently. They can access credit faster, they can access capital faster, negotiate better terms, handle emergencies with less disruption, invest earlier, build assets more aggressively, create sustainability for their families. Your credit report has now become a financial reputation system. And that's today's business report. I'm Denise Williams, bringing clarity to capital, markets, and strategy. Until next time, stay informed, stay intentional, and keep building forward. See you soon.